friends, in this video I am going to talk about what is meant by IPO. IPO means initial public offer. It is basically crowdsourcing. So now let's say the company which you found is doing good business, okay, and it is doing good business, revenue and profits are increasing, and it wants to expand its business and operations. Now for that expansion, it needs more money. Now to raise more money, either it can go to a bank and ask for loan, or the existing shareholders can put more money into the company, or the company can go to the public and ask for money and in return give them its shares. Now this process of going to the public, asking for money and then giving them the shares of the company is known as IPO, initial public offer. Now let's say the company is issuing 1 crore shares to the public. Okay, and in the previous video we saw face value. So face value, let us say, is 10 rupees. Now when the company is issuing shares to the public, it will always issue at a premium. Okay, now let us say the premium is 40 rupees to the face value. So the issue price is 10 plus 40 is 50 rupees. So amount of money which the company will raise from the public is 1 crore shares into 50 rupees is 50 crore rupees. Okay, now you might ask, why should the company charge a premium on the face value of its shares? It is basically simple. Why does iPhone cost 1 lakh rupees and other phones like Samsung or OnePlus is not equivalent to cost of an iPhone? Simply because of the brand and the quality of the iPhone. Similarly, if the brand of the company is very strong and the business of the company is very good and it is really performing well, then the company will charge a premium to the public while issuing the shares to the people. And the premium which is charged by the company has to be backed by proper workings and justifications and proper calculations. It has to be given to SEBI and stock exchanges, and only after their approval the company can fix the premium which it will be charging to the shareholders. Now once the shares are given to the public will apply to become the shareholders of the company. Now let's say 1 crore shares are given, a public company is issuing 1 crore shares. Now a lot of people will apply to the company for buying the shares. Now let's say the company got applications for more than 1 crore shares. Okay, company got say 2 crore applications for the shares. Now this is known as oversubscription. If the company gets less than 1 crore applications, it is known as undersubscription. What happens in case of undersubscription? Let us leave that. There is a separate process known as underwriting. Let us not go there. But in the case of oversubscription, that is when the company has received 2 crore shares, when it is issuing only 1 crore shares to the public, then the company will do pro rata allotment or proportionate allotment of shares to the public. Let us say you applied for shares of the company. Whenever the public applied for the shares for the company, you have to apply only minimum lots. You cannot just apply for 1 share. And that minimum lot is somewhere around 15,000 rupees in the IPO. So let's say you applied for 15,000 rupees. So 15,000 divided by 50 rupees issue price comes to 300 shares. So you applied for 1 lot of 300 shares to the company. Now when there is oversubscription, the company will do pro rata allotment, which means you might either get all the 300 shares, or you might get 200 shares or 100 shares, or even nil. You might not even get 1 share also, depending upon how the company does the pro rata allotment. Now after the allotment process is over, and say assume you got 300 shares in the allotment, so you become the shareholder of the company. And after the IPO process is over and the shares are allotted to the public, the shares will be traded in the stock exchange by the public, and you can buy and sell the shares of that company. So your investment of 15,000 in the future can grow to 30,000 or whatever amount based on the company's performance. So let us say if the company's performance is good, revenue is going good, the profits are also increasing, company is doing well, so the share price can increase and it can double, say from 300 if it goes to 600, then your investment value becomes from 15,000 to 30,000, and that is how your investment grows. And that is the reason why people buy and apply for the shares of the company in the IPO if they feel that the company will perform well in the future. So I hope after watching this video you understood what is an IPO and how the IPO process works. Thank you.